Okay, so now we're going to go through the 4-hour chart New York scalping setup that I like to take. All right, so this is one of my other favorites. It's good for when you don't have one of the other setups, the DSR or the SSR. If they're not setting up, you can get more setups by using the H4 scalping method, and that's what I'm going to talk about now. Okay, so it's important to understand the characteristics of a candlestick or a bar chart to start with before we continue with this. Right, so what we're going to be looking at is a bearish candle. The way the bearish candle works, you always start with your open, which is more towards the top end of the candlestick. Then it goes false directional move up to make the high of that candle. Then we have an impulse down, which makes the low of the candle. Then we have a pull off the low into the close. Okay. Now in between the open and close, that's where the candlestick body would be. So the color, whether you have red or black, or whatever color you have in your candlesticks, between the open and the close is where you would have your candlestick body. The high and the low will be the wicks. Okay, so for a bullish candle, your open is more towards the bottom end of the candlestick, right? And then you have a false directional move down to create the low of the candle. Then an impulse move up towards the high. And then once you come off the high, you then go into the close, okay? So again, between the open and close is where your candlestick body is going to be. Okay, so that's the characteristics of how the open, high, low, and close works on a candlestick and a bar chart. Okay, so the first setup we're going to be looking at then is the bullish setup. All right, so this is the 4-hour chart, as we said a minute ago, and this is typically just a New York scalping setup that I like to take, and it's something I came up with a couple of months back. Okay, so to start with, we have a down close candle. Okay, that is the London candle that we're going to be looking at. It typically starts 2 hours before and goes into 2 hours into London Open. We're not looking to take any trades during this time. The next candle we're looking for is to have it open and engulf completely engulf the previous candle, right? So it breaks the high with a lot of momentum on there. Once we get that, we're looking for the next candle after that, which is then coming into New York to open. And like I said in the previous slide, you're looking for that false directional move. Once you get a false directional move down, it's coming back in to retest the original down candle, which becomes the order block, right? Now, when you get the retest there, you're going to be hunting your entry. Now, you can go down to a smaller time frame, like I said in the confirmation entry video that we did previously in the course. You can go down to a smaller time frame to get a much better risk to reward. However, if you do decide to just enter on the retest of that candle, your stop loss must go underneath the up close candle, okay? And that's going to hopefully protect your stop at that point. Once you get your entry point, you're then looking for a price to then take off in bullish momentum, and that is your trade there, okay? So that's for the buys. Next one, we've got the bearish setup. Okay, so just everything we've just been through in the previous slides there. You're looking for everything there but inverted, okay? So you're looking to have the up close candle. Once you get the up close candle, you're looking for the next one to close as a bearish engulfing candle to completely break the low and close below the previous candle itself. Okay, and then the next one's going to open. All right, once you get that, you get your false directional move back up into the order block, okay, the original green candlestick. You're going to be hunting your entry point here, and like we just said in the previous slide for the buy position, you're going to be looking on lower time frames. If you want to break it down, you can go onto like confirmation entries on like an hour, 15 or 5 minute chart and look for your market structure in there. If you do decide to just enter on the retest of the 4-hour candle, your stop has to go above the original down close candle, okay, and that's going to be your entry point and stop loss. Once you got that, then you're looking for price to take off with bearish momentum, and again, that is going to be your trade. Okay, so talking about timings. So with the timings then, we've got the order block. So the order block is going to take place at 0600 till 1000 UTC. So that's 2 hours before and 2 hours into the London Open session. That's typically going to be where things happen, like your stop hunts, whipsaws and things like that, where it's going to be the market manipulation takes place, right? So there's a lot of opportunity there for people to get battered in the market. Once that candle closes at 10 o'clock, you're then going to have the next 4-hour candle open at 10 o'clock, and that one's going to go into 1400 UTC. So that's going to go from 2 hours before New York and 2 hours into the New York session. You're not going to be taking any trades during that engulfing candle. You need to let that one close and see if it's going to break the previous candle, depending on whether you're going long or short. And then once you hit 1400 UTC, so 2 o'clock in the afternoon, you're then going to have the next candlestick open, which is the retest candle. Okay, this is the candle you're looking for your entry points. At 1400 UTC, that candle is then going to trade back up inside the order block, the original order block from 6 o'clock till 10 o'clock. That's where you get your retest, okay, and then like we said in the previous slide, you can then go down to smaller time frames in order to get your better entry, better risk to reward, okay. Once you get that, you're then looking to take the trade, and you can hold that all the way up till 6 p.m. or unless you've got other targets that you're looking to hit, okay. So that is the overall timings for that setup. The good thing about this setup as well, it means that you know a specific time window that you got to be at the charts, okay. So with the 1400 to 1800 candle, you do want to come into the chart about half hour early just to see if anything's setting up. Very, very simple setup. And something that you can flick through a lot of different currency pairs and different assets, just looking particularly for that, okay. So that is it for this video. I'll see you in the next one.